Okay, please take note that this presentation is purely for educational purposes. They are of my opinion, not of IG's. It does not take into account specific investment objectives, financial situation, or particular needs of any particular person. Okay, moving along. So, I think this whole week, in terms of fundamental-wise, I think the Fed is taking center stage again. Previously, I think it was just 2 weeks ago, they decided not to hike rates. It sounded a bit more dovish. I mean, initially they anticipate 4 rate hikes this year, and now they push it back to 2. But having said that, I think it's a mixed bag, and I always tell traders that and tell clients that if you try to guess what's going to happen fundamentally, you go crazy. Okay, because it's not the case of I think I showed this picture before in the PowerPoint slides, but it's not the case of Simon Says and then as traders, who are we to guess all this fundamental news? I mean, it's good to know them. It's good to understand what's happening. It's good to have a bit of a bias or a bit of opinion, but really, it's really hard to guess what might happen. Tonight, Yellen is giving a speech at 12:20 a.m. Singapore time. So for those who are trading the US indices or any dollar-related pairs, please be very careful because I mean the dollar will be impacted based on what she says. Okay, so just be mindful. About 12:20 a.m. Singapore time. That's where she'll start to speak. Okay, so moving along, let me just see whether there's anybody new. Okay, so let me just do a quick glance through the theory portion of the webinar for those who are, for the benefit of those who are new. Again, same thing. I use price action to analyze the markets, and my strategy or my analysis is I'm just trying to chart the markets and categorize it based on 3 phases, whether it's uptrend, downtrend, consolidation. Okay, if you want to know more about price action, you can read up more, or you can drop me an email and I try to direct you to some sites that you can read about it. Okay, but it's a very, very useful tool because if you know what the market is trying to do in terms of which phase the market is in, it solves a lot of problem. And price action can be applied to any time frame, even if you're a scalper or swing trader, swing or long-term trader. Okay, so moving along, let's start with the market scan. Okay, so I think this year, right, I think the first webinar of 2016, I introduced MT4, not because I trade using MT4, but because of the functionality of doing a scan, right? So under profiles, right, you can see that I created different kind of scan. I got a cross pair scan. Cross pairs meaning like a pound CAD, pound Aussie, Euro Aussie, and things like that. I got my Swiss pairs, my yen pairs, my dollar pairs, and I also got indices. I don't know why it's called British pound, but this British pound basically is the indices. Okay, so I basically put all the charts up there, and my preference is a daily chart because I'm more of an intraday swing trader. So for me, I only trade according to the daily trend. But what this MT4 does is that it gives me an overview in terms of what's happening in the market. And if you look at the indices globally, right? I mean, look at this screen right now. I got the S&P, I got the Dow Jones, I got the DAX, I got the Hang Seng, I got the Nikkei, I got the CAC, got the FTSE. So one look at all the indices now. Can you tell me which one has the clearest trend based on the daily chart? So based on this 1, 2, 3, 4, 5, 6, based on this 8 index I have on the MT4, which one do you think is the clearest trend? US. Okay. Yep. US. Yep. Some of you say US. Yep, that's correct. I think most of the US daily chart, at least, has the clearest uptrend. Okay, this is a very clear uptrend. Any of you think it's a downtrend, please see your eye doctor. But yeah, it is the clearest uptrend. And upon closer look, let's say if you take the S&P 500 and if you zoom in, you can see that for the past 1, 2, 3, 4, 5, 6, 7, 8 or 9 days, there's really hasn't been any direction. All right, I mean, I was at home during the Good Friday holiday on Friday because I couldn't book any flights out of Singapore because I was being stingy. Because, you know, in Singapore, if you try to book a last-minute flight, especially on a long weekend, all the flights, the prices double. Okay, I was just being stingy. I just didn't want to spend the kind of money. So I stayed at home. I tried to trade during the Good Friday holiday, and I really couldn't find anything. And the market, partly because the market was so thin as well. So I was very tempted to, you know, do some scalping, but I just totally did not do anything. Okay, just discipline myself. There's no particular setup, don't trade. Easy as that. But but this is a story for most indices for the past 2 weeks. It has been really sideways, right? And if you look at the, you guys are right in terms of daily chart. It is a very strong uptrend. But if you go to a weekly chart, okay, you can see that it is in the area of resistance already. So even if it's strong uptrend, you probably wouldn't want to buy anywhere where we are right now. Okay, unless you're scalping for just like 10, 20 points. But if not, as a swing trader or even an intraday trader, you got to be careful if you are trying to buy into the uptrend. Okay, you probably want to wait for it to pull back a bit more. Okay, so but you guys are correct. So the whole purpose of the MT4 scan is that is for you to have a look at what's happening out there and give you understanding, you know, or give a better understanding of what's a nicer instrument to trade. Okay, because it helps a lot. It helps a lot because when you trade, right, already it's very draining psychologically when you're trading. Okay, a lot of psychology involved. Trust me. So what you want is to keep the analysis part as simple as possible. You want to be crystal clear at what you want to do. You want to know which particular instrument you are shortlisting to trade. You want to know exactly what you're looking for to enter the trade. You want to know exactly what you're looking for when you want to exit the trade. All this must be crystal clear to you because all this is part of the trade planning process to prepare you before you pull the trigger. Okay, so you want the process to be simple and you want to do it every single day so that it becomes second nature to you. Okay, so this is this scanning thing is very useful for me. You can always set up an MT4 account with IG. You don't have to fund it if you don't want to, and you can just use it as a platform for you to do your scans. And then once you find something right, then you can go to Pro Real Time to trade it. All right, that's what I do at least. Okay, so this also MT4. You're right. The S&P and all the US indices are the most trending ones, but if you go to a higher time frame, it's a bit more tricky. So let me move to the Pro Real Time charts right now. Yeah, John, Friday market is really quiet, isn't it? Okay, so let me move on. Let me start with the S&P. Okay, so the daily chart is in a very nice uptrend, no doubt about it. All right, in fact, it was so strong, I missed a lot of pullbacks. Okay, if you're taking intraday scalping trades, I think you might be able to catch some of the rallies here. But if you're waiting for a nice pullback, most probably you wouldn't have. I'm not sure how many of you attended my webinar. I think it was 2 weeks ago. Last week we didn't have a webinar, but 2 weeks ago I was teaching a new, I wouldn't say a new strategy, but for the shorter term traders, you know, I was teaching on how you can do intraday trades, especially at market opens. Market opens means that you're looking for Hang Seng and Nikkei trades in the morning. You're looking for DAX and the Euro indices trade in the afternoon about 4 p.m. And for US session, you're looking for more of the S&P, NASDAQ, and Dow Jones kind of market open trading. And it's basically a bit of a scalping / intraday trading. You can use the 5-minute chart, the 400-tick chart, the 15-minute chart, and basically try to find entries, especially when the market opens at the key support or resistance level. You can do trend trading, you can do counter trend trading, but the key thing is that it needs to be at the key support and resistance level that is very obvious to you. Because if obvious to you, it's obvious to me, it's obvious to a lot of traders, and most probably technical analysis being a self-fulfilling prophecy, it will happen. Okay, so I'm not sure how many of you attended the webinar. If not, go to the archive and watch it. I think it's very useful because I think after the webinar, the next few days, right, there were quite a number of few opportunities on the DAX, on the Hang Seng, and the S&P. I personally caught a few pips based on those setups. Okay, so if you guys tried it and has any questions, please feel free to shoot. But that was the last webinar in terms of how to catch all these market opening moves. Okay, because I think intraday can help as well, especially if you're a short-term trader. It can help. And if you're a full-time trader, trust me, intraday helps to pay the bills. Because sometimes swing trades, it can be quite taxing, especially if you're waiting for a trade or you're in a trade and you're waiting for it to come to your target. It can take days or even weeks if you're a swing and position trader, so it can be quite taxing. So intraday does help as well. Okay, so so if you look at the S&P 500, right, I mean, it is a nice uptrend on daily chart, but the thing is that there's this trendline resistance that is just up ahead. Okay, again, trendline is just a pure guide. Yeah, it's a very discretionary thing. So I don't trade off trend lines, but I use it as a guide. Okay, but we all know this area here is resistance, and you see many days it has been consolidating. If you go to the 4-hour chart, all right, let me just zoom in a bit. you can see, okay, that we are consolidating. You can see the trend line here, and this is the line that I drew. Okay, this line, the level is about 2025 or so. Okay, because it tried to break below it on 24th of March, couldn't, and push higher. Okay, so right now it seems that if this previous low was broken, if this previous low at 2030 is broken, most probably we're going to the next level 2025. And then that's where we'll see whether the market will make a bigger correction or will continue to grind higher. Okay, but there's not much movement as you can see for the past 2 weeks or so. All right, the key thing is that it's made two lower highs, which means that the momentum to the upside is waning. Okay, so I'm more inclined to think that we might, if Yellen doesn't see anything surprising tonight, there's a high chance we might make push down to 2025. But like for most indices, I would say keep the trades short term, okay, because there's not much direction in terms of long-term picture. I think there's a lot of us agree that there's more downside room in terms of movement rather than upside, isn't it? It's just that even if you are bearish on it, you got to be patient until the chart tells you tells you that it's bearish. For me, it needs to break this 2025 level first for me to be bearish on a swing position. But if not, I think keep it short term. There's still pips to be made. Okay. So that's the S&P for you. I think it's quite similar story if you look at the other indices, for example, the Dow Jones. So if you look at the daily, even the weekly chart, the Dow Jones, right? They're just consolidating in this whole big consolidation pattern. You can call it a wedge or whatever you want. But we are at resistance. Okay, the market seems to be unable to break this level clearly, 17,500. And I'm not sure who I drew these lines for. But basically for me, the key support is around the 17,000. If you break the 17,000, high chance we're coming bottom of the wedge. If not, the market will still try to push higher and higher and higher. Okay, so this level is quite key to me. This 17,005, 17,006. If you go to the daily chart, you can see a bit clearer. Okay, it looks very similar to the S&P. See this? Okay, something like that. Alright, so key level I'm looking out for is this 17, okay, this level here, around the 17,004, and the next one the 17,000 level already. Okay, but we are in consolidation mode for most indices, so nothing much to analyze, just be very careful and take short-term trades. Alright, moving on, let's go to the DAX. Sorry, DAX, this is Hong Seng. Let's go to DAX here. Okay, so this is how the DAX weekly chart looks like. Okay, so it's trapped in some form of channel. I wouldn't say it's a clear downtrend now. I would say it's a mixed bag. But the key level, what I like about the DAX is that the levels are very clear. Very clear levels. Okay, so if you see this 10,000 level, right? Resistance, and is another resistance. Couldn't break it, tried to, but did not. So the longer we stay around here without breaking it, we have been here for about 3 weeks, couldn't break that key resistance level. The longer we stay here, the higher probability that we are moving down already. Okay, so if you go to the daily chart, all right, you can see clearly here. I think I drew this channel last week, but you can see clearly here that this level here, this 10,000 level is very stubborn. Look how many days we hovered there and could not break. Okay, so for me, the key level to look out for is anywhere around the 9,007, 9,008. All right, let's go to the 4-hour chart to have a better look at what's happening. Okay, so if I zoom out, this is a 4-hour chart, by the way. So the 9,008 level is somewhere here. Okay, somewhere here. So we are consolidating around that level. And for me, if it breaks, there's a high chance we'll move to the next level down. So if you're trading intraday short-term trades, a break of this 9,008 level convincingly, okay, might signal a move lower, because on the daily chart and the weekly chart, we look very overextended and it has been sideways for the past few weeks already. Okay, now if the level is not clear, don't pull the trigger. As simple as that. Okay, a level needs to be really clear. Like for example, if you look at this 4-hour chart, right? Alright, for me, this is not the clearest level because there are 2 levels here that you need to be careful of. You see that? Okay, so the first level is around 9,008. The next level is 9,750. Okay, so if you're trading short term, alright, all these levels on the short term chart, the lower term time frames are very important as well. Okay, but it is definitely a bit more consolidation in terms of the 4-hour and 1-hour chart. But in terms of daily and weekly chart, it's still on an uptrend, but it's struggling to break new highs already. Alright, so if you think you're a good enough trader and you want to mix it up in terms of your trading, you can add intraday or trades to your toolbox as well. Okay, but you need to be very mindful of the short-term charts and what it's trying to tell you. But it's always good to take direction from the high-term time frame first, so that you know what's happening. All right. So that's the DEX for you. Let me move to the Nikkei. Again, you guys got any questions? Please shout out. Yeah. All right. So Nikkei. Let's go to weekly chart. Okay, weekly chart is still in a downtrend. We are at the area. I mentioned this, I think, many webinars ago. So this is a series of lower low, lower highs, lower low, and then lower highs. Weekly is still in a downtrend. Let me take away that circle. Okay, so where we are on the Nikkei. Okay, where we are on Nikkei, we are unable to break this resistance level here. In fact, if you draw a line across, okay. Oh my god, that's a horrendous looking line. So sorry about that. But yeah, if you draw a line across, you can see that this level here is a strong resistance. Okay, let me just take that away. Okay, but this candle here, it shows a rejection of that key level which I drew. Okay, it's much better looking line. Okay, so this whole level here, this whole level here. Okay, so that red candle shows a rejection. So the key thing is the longer we stay below, chances are we are going to turn back and maybe come back to the previous support at 16.5. Okay, if this support breaks, then yes, we're coming back down again. But the key thing for me is I want to, if it starts turning from this key resistance level, and it is in a downtrend lower high area, which is a good level to enter for a downtrend, then I'm keen to try to capture this pips here, at least to the next support level. Okay, so this is how the weekly chart looks. To me, the weekly chart is still in a downtrend. However, if we are going to break this candle high, then it's a different story altogether. So let me just move to the daily chart to have a clearer look. Okay, so you can see the daily chart. You can see that for the past 3 weeks or so, we are unable to break this resistance around the 17,300 area. All right, so there's this little trend line here that is supported. So for me, if this trend line breaks, right, chances are we're moving to the next support of 16.5. And that's about 500 points to capture if you're an intraday trader. Alright, but I'm very keen to see what happens on this trend line. So let's go to lower time frame. Alright, so the trend line that I drew, let me just draw it in the 4-hour chart, is somewhere like that. Okay, so if you're an intraday trader, especially for tomorrow at the market open, let's see what happens at this level here. This level is a 16,009, or give it about 17, no, let's be more precise, 16,900. Okay, 16,900 key level to look out for. Let's see what happens in the market open tomorrow in Japan. If we break below it, okay, if we break below it, let's say it comes down, breaks the key support, I'm more than happy to take a pullback and then try to take it down to 16.5 at least for intraday trade. Okay, but you must break below the 69 first. So that's more like an intraday setup for the Nikkei. Okay, but I like the levels. It's looking good. Levels are looking good. And you can see that the number of tops is making here. It shows that there's a lot of exhaustion in terms of the uptrend. Okay, quite nice resistance here as well. So it's looking good on the 4-hour chart in terms of a short-term intraday short. Let me just go back to the daily chart. So if you look at the daily chart, it also gives you a very clear picture that there are many, it looks quite toppish, okay? It looks quite toppish. But it needs to break that trend line first before there's a high probability that it will go to the next level support. Maybe around 16.5, 16.6 or so. Okay, but more than enough for intraday kind of trading. Okay? Low, is it? You can't receive the video. What kind of difficulty you're facing in terms of getting to the webinar? Does it take a long time to load, or? Because when you click on the link on the email, right? Because when you register, you receive an email. When you click on the link, it shouldn't take more than 1 minute to load. It's a pretty good software. But can you hear me now, Mr. Low? Okay, so that's one thing to look up for the Nikkei. Give it a try. For those of you who want to do more short-term trading, give it a try and see whether it works for you. Okay, but I think I explained more during the last webinar, so watch the recording. Yeah, thanks Xavier for the suggestion. You can try refreshing the page, Mr. Low, to see whether it might help. Alright, but it should not take more than 1 minute to load up when you click the webinar link. Yeah. Okay, so that's Nikkei for you. What's next? Moving closer to home. Let's go to the Hang Seng. Okay, so Hang Seng. Let's go to the weekly chart. Okay, Hang Seng weekly chart. It seems to have reversed the upside. Okay, so let's start from, this is a very big lower low, isn't it? Lower high, lower low, lower high, and then we have made some kind of resurgence upside, a high high. So the weekly chart has changed our trend to the upside. However, the key support level is still around the 20,000 level. Still around the 20,000 level. Okay? So this weekly chart means delete circles. Alright, so we are at the key level. Around, I would say, let me zoom out a bit to check level. Yep, I would say around 20,000. Key level for the Hang Seng. So if we go to the daily chart, okay, you can see daily chart is an uptrend. Okay, so you can see that we made a higher low. So all these circles I drew, I think the previous webinar, right? So daily chart is definitely on the uptrend. Okay, the key level on the weekly chart is around 20,000, around here. Okay, let me just draw it for you. Okay, you can't see much on daily chart, but this level here is quite important. Okay, I was hoping that today we might make a push down and then market open at 20,000, and then I'll see the short-term charts to see whether we can take it up for some kind of intraday trading. Didn't happen. Okay, because what happens is that if you look at the where we are, right? So if you look at where we are on the daily chart, let me just zoom in a bit more. Okay, you can see that it is on the uptrend. We have retraced a bit, and we are lingering near the support level. Okay, so if you see some kind of push from where we are right now, there's a high probability that we might make a push the previous high at 20,008, which to me isn't the strongest of resistance. To me, the stronger resistance is here, 21,000. Okay, 21,000. Just stand it for you. Okay, so the stronger resistance is around 21,000, which we did not hit the last time we made a high. We only went to 28 and then it came down. So I'll be very keen to see what's going to happen here. And if I see the trend changing on the upside on the lower time frame, alright, there's no harm in trying to target the 21,000 next resistance level. Okay, because daily is still on a uptrend. Alright, that is the Hang Seng for you. Okay, but to me, this whole resistance level is broken. I was a bit more pessimistic when we were, I was a bit more bearish when we had the 20,500 levels here, because of all this resistance. But it seems that we have broken above it quite convincingly. Alright, which is why I'm a bit more bullish right now. But I need to see some reaction at this level where we are right now. So pay attention on the lower term time frame change of trend at the market open tomorrow. Xavier, do you use Fibonacci to predict price, where the price will go? I use Fibonacci more for retracement in terms of entry. So if I find, like, let's say for example, if I think that this is an uptrend, okay, let me just redraw this line a bit. Yeah. So, oops, sorry. Okay, so for example, if I zoom in and I like this uptrend pullback, so what I do is that I use my Fibonacci tool, okay, and put in the retracement there. Okay, and it seems that this level which I drew as support is around the 50% retracement level. So I will use Fibonacci levels to try to combine it with other support levels like visual support, psychological support like whole numbers, pivot points, open close of previous days or previous weeks, and basically try to build up the trade plan from there. Okay, but I mean, Fibonacci is a secondary tool to me. I use it only when I want to find entries. I don't use Fibonacci to predict to project for profit targets. So I know a lot of traders do that. You can do that. No harm in using it. It's just that I'm not used to it. I might incorporate it into my trading moving forward, but so far I've not. I just use previous support and resistance and change the trend on the lower time frame to plot my exits. Yeah, you can. I think a lot. I think it's quite. I was speaking to my friend who's a full-time trader, and he uses the the Fibonacci expansion to try to predict where to take profit and things like that. You definitely can. Okay, but it's just my preference. Okay. I mean, when it comes to trading, there are 1,001 tools out there. Okay, you just need to know how to use them. That's more important. And for me, it's more important to be good at a few indicators than be a master, than try to be good at everything. You just get too confused. All right. Yes, correct, John. I mean, harmonics patterns use Fibonacci retracement and extension as well. So this really depends on what's your cup of tea. There's so many ways. There's so many educators out there. Okay. But I always say trading is a lot of psychology. So quickly find something that suits you, something you like, and then work on psychology. It takes much longer to sort that one out. All right, the devil is within. That's what they always say. Okay, so this for the Hang Seng. Next one is what else have I done? Nikkei? Oh yeah, Nikkei I've done. Sorry. Okay, let me just end off with the China A50. Okay, so China A50. Okay, so China A50 weekly chart still in a downtrend. Okay, lower low, lower high, lower low, although not the strongest lower low, and another lower high. So again, for those of you who missed my previous webinars, I think I covered quite a bit on divergences and divergence. Divergences, is that even an English word? Sorry, must be my hunger. But divergence, yes. So divergence can be very useful. This is a very clear case of divergence. You can see the price made a lower low, but MACD made a higher low. So this is a bullish divergence, and not surprisingly, for the past few weeks, it's been pushing higher. Okay, but I think we are at that resistance level. The past 3 weeks couldn't break the 9,700 area, so I'm not be surprised. In fact, you can see the Hang Seng definitely looks more bullish than the China A50, but in terms of this area here, right? All right, if I see more weakness, all right, I might plan a trade on the lower term time frame to try to short it down to the 8,004, 8,005 level. Okay, if you look at the daily chart, you can see that daily chart is definitely an uptrend. High low. So that level I'm looking at, okay, you can see this trend line supporting it. Okay, so this level here, if it breaks the 9,002 or so, it indicates that the daily is reversing the downside, which will confirm the weekly downtrend, and you can take it down to the previous support around 8,005, 8,004 or so. Okay, that's where the daily looks like, but the weekly chart definitely looks a bit more consolidating to bearish really. Unless you break the previous, this candle is quite key, this candle at 21st March. If we clearly break above 97, then the analysis is wrong, but the longer we stay below it, all right, there's no harm looking for a trade to the downside back to the previous support level. All right. Sorry about that. Okay, so there's a weekly chart, daily chart. So going to a 4-hour chart. Okay, you can see that the 4-hour has this support going from them, and then where's my 9,000 level? 9,000 here. There's another level support. Okay, so trade plan. If you're looking for intraday kind of trade, the good thing is that 4-hour chart is making a series of lower highs, which means that pressure is to the downside. Alright, so if it breaks the 9,004, 9,380 level, which I drew this line, chances are we are going next to support, back down to the next support level. Alright, so I hope you guys are able to understand. Now incorporate more charts. I used to just talk about weekly and daily chart, but because based on feedback by clients who attended the webinar, they said that they want to do a bit more mixture, like a bit more intraday kind of things, because I assume most of you are intraday traders. So I try to mix it up by throwing the 4-hour chart as well. So I still do a top-down approach, but I try to give you a bit more intraday setups as well. All right. So, but it's just, if you're able to appreciate, understand the thought process behind it, for me, that's the most important takeaway of my webinar. Not whether I can give you good tips or where to buy and where to sell. Okay, the thought process behind it, the analysis is much more important. So this level, so that's why I bring the 4-hour chart. We give you a better perspective. So you can see that, if you know price action, you can see that the price is compressing itself to the downside. Okay, every time it forms a high, it forms a lower high, and it has made a bottom, double bottom. So tomorrow, market open, China, if it breaks below this level, what do you think I'll do? Buy or sell? Most probably I'll take an intraday kind of short, maybe to the next support level. Okay, so that's an intraday setup for you. But it's I mean, I'm not planning a setup purely based on 4-hour chart. I'm planning from top down, so I'll start from weekly, daily, so that you have under better understanding of what's happening. Okay, so that's China FTD. All right, any questions regarding indices? Now I move on to FX. I think as usual I overshot my time on indices, but never mind. Let's see, Xavier. Do you use FA analysis or just pure TA? Good question. I can go on and on about this because I always have good debates with my clients and other traders. I swear I have clients who are pure fundamentalists and they really hate TA. I don't know why. But I mean, I understand. I mean, I speak to. I mean, obviously, I do TV interviews in terms of what the market is, where the market is going, and things like that, right? But let's say on Channel News Asia, for example, like this coming Friday, I'll be doing 8:30 interview Channel News Asia. It's mostly fundamental. Okay, they ask me about what Yellen has said, what are the implications, where do you think oil prices are going, will the Iran sanctions affect oil prices, blah, 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 blah. All these are FA. But the big question you should ask yourself is, even if you hear all this on news or read about it, does it help in your trading? Okay, because all these are just educated predictions, isn't it? But in terms of trading, to be more precise, you definitely need technical analysis. So for me, sometimes technical analysis leads fundamental analysis. So it's important to know what's happening in the world out there. But in terms of to be more precise in terms of how to trade as a trader, you definitely need TA. And I mean, in the past few years, I think TA is even more important because you look at the fundamentals of the economy and how the stock market is moving. It's so divergent. So it's really hard to understand, where the true value of the market is. Can you imagine if there were no quantitative easing done by any central banks for the past 4 to 5 or 4 to 6 years? Where would the market be? If it's just purely based on economics and fundamentals, where do you think the market would be without all this QE? So it's good to know TA as well, so that you're able to, to understand where the sentiment is. Because as traders, we are trading the sentiment at the end of the day, especially retail traders. We're just riding trends. Okay? We're not trading the big picture. We're not Warren Buffett with millions and billions of dollars to try to, buy and hold and keep for years. So I think TA in the sense is very, very important. Okay, so even if you're a fundamental person and you say that, okay, you think the U.S. economy is improving, it is, right? Employment figures are better, 4.9% unemployment, NFP is printing better numbers, you got inflation slowly creeping up, CPI is about 1.7% year to year. So all these numbers are actually improving in terms of the U.S. front. So if you're fundamentally, you say, okay, great, U.S. economy is improving, so what are you going to do? Buy the U.S. index, keep it for 20 years. Would you really want to do that? Would you really want to buy the S&P at the current levels and keep it for 20 years? Maybe not, isn't it? How many of us would be comfortable to do that? So that's why you need TA, because if you look at the chart, you know that the S&P has ran its course, has rallied for the past 4 to 5 years, and it looks quite topish. Why in the world would you want to buy here and keep it for the next 5-10 years and keep it as a long-term investment? Doesn't make sense, right? So to me, if you ask me whether I'm a more TA or FA, I'll say I'm leaning towards TA, but I need to know what's happening fundamentally as well. And of course, you need to, even if you're a pure technical analyst, you cannot be blind and say that you ignore the news, because news can change the whole dynamics of the chart sometimes. So you need to know what's going to happen. For example, if you're trading dollar pairs tonight or you're trading the S&P, you need to know that Yellen is coming out to speak about 12:20 a.m. Singapore time. Correct? If not, you trust me, you'll be shocked if you just ignore such things. Okay? Okay. Xavier has a question. Is it recommended that we do trend trading since it's hard to identify the highs and lows? Yeah, 100%. I'm a trend trader. I mean, sometimes I do counter trend intraday kind of thing, but in terms of swing trades, I'm always a trend trader. So if you notice that my top-down approach is always trying to follow the trend. But I mean, you can't have really straightforward trends all the time. When I say straightforward, means like the weekly chart is downtrend, the daily chart is downtrend, the 4-hour chart is downtrend. Those are the nicest kind of trades. You can't have such setups all the time. So you got to be a bit more flexible when you approach the market sometimes. But it takes time. It takes time. Yep. Okay, cool. So let's move on to, thanks for the question, Xavier. Really interesting question. So let's move on to FX. I'll take a 10-second pause.